Okay, so welcome everybody to today's webinar, and I'd like to, at outset, thank Patrick Zielbauer and the folks over at Finity for hosting this for us today, and we appreciate the time that each of you have taken out of your busy days to come visit with us today and take a look at what this webinar is about. Now, this webinar is going to be a little bit different than some past webinars, and of course, most webinars that you've probably attended, it's more of a a sales presentation, who people are and what products they have and so forth. We've done a number of webinars with the folks over at Infinity, and I see many familiar names and many also that I'm not that familiar with, and again, I welcome each of you to the webinar today. Today what we're going to do is I'm going to make this more of sort of a training session. I'm going to introduce a tool that we have had in development, as Patrick mentioned, since the beginning of the summertime, and that it's been an evolutionary process to bringing some automation to the methodology that we have and the setups that we look for on a daily basis. So with the onset of, as we know, a lot of algorithmic trading out there, all right, so why not put the power of auto trading, or at least semi-auto trading, into the mix as well. So that's what we've done over this past summertime, and we recently released to our members, and we're rolling out slowly to the general public, an auto trade assistant. Now, the operative word here is assistant. It is not a black box, this particular tool that we'll look at today, but it is rather an assistant that will help us use the power of the automated trading features of Sierra Chart to help us execute some trades. Now, many of you probably have hesitated taking trades. Maybe you're quick draw McGraw on the trigger, maybe you overtrade. This is going to help in either of those cases, going to help slow down the process, make it a little bit more methodical, and hopefully it will help improve your current trading status. So again, we want to welcome you to today's webinar. All right, Patrick has already gone over the disclaimers. I just want to highlight our disclaimer here that Polaris Trading Group does offer services and products for educational purposes and on a subscription basis fee. And myself or anybody associated with Polaris Trading Group are not licensed brokers or advisors. We're mainly educators. And the demonstration that we're going to look today at falls under the NFA compliance rule 2-29, simply that hypothetical results, performance results have limitations, etc., etc., and past performance is not indicative of future results. All right, so let's just get right to the features. Before we do that, many of you already know who I am, but I'd like to give you a little bit of background of myself. I've been trading for about 30 years, a little over 30 years now, at various investment banks and hedge funds, and currently as an independent proprietary day trader, just as many of you are. My background has spanned over the years places such as Schiess and Lehman Brothers, United Bank of Switzerland, UBS, and a couple high frequency hedge funds. During that period of time, I was a market maker in listed NASDAQ stocks, as well as traded index futures, various derivative products, and various aspects of portfolio management. So I've taken this experience that I have over the years, and I've created Polaris Trading Group to pass along to those interested of learning how to trade and getting insights from a professional trader at the investment banks over the years. Now, the mission that I want to put forth to you here today, and to give you just an overview, is it's a four-pronged mission that the core part of what we do. Number one, I want to help you guys improve your decision-making skills. We know that you know how to trade. You know the general layout of the market, what a futures contract is, etc., etc. But the process of trading involves a fairly complex decision process, and it can be very overwhelming for many. What we want to do is um, narrow it down, make it a little bit simpler. All right, trading is simple but not easy, so we want to help improve your decision-making skills. Certainly, we want to help empower new trading habits. Many traders out there consistently, I hear many of them and speak with them that, they're constantly making similar errors over and over again. So they simply have some bad habits that, can be certainly overcome. And what we try to do is, again, provide a whole structure throughout the program on a day-to-day basis in the methodology to help, get over those trading habits that are not helping you to move you in the proper direction. Demystify the price action. I kind of use a phrase, pay no attention to the man behind the curtain, from The Wizard of Oz. The bottom line is a lot of people do think that, the algorithms and the big investment banks and the hedge funds and so forth really drive the market, and they have an edge perhaps more than we do. To a degree, they have an edge because they have a lot more money than we do. But an edge is, the way I view it, is a knowledge. And the knowledge that I have and I've learned over the years, again, I'm passing along to our members. If you don't have a mentor, an educator, or somebody that you can learn from that doesn't really have hands-on knowledge, all right, of how the investment banks and hedge funds work, that person is probably not necessarily the best. I mean, they could be very smart, very good educator, but the insights that provided from knowing the markets over a 30-year span, I think can definitely helps our members here at Polaris Trading. And simply, we want to help you become a more informed trader. I don't categorize traders as retail, experienced or professional or inexperienced, but rather there's two groups. There's the informed trader and the uninformed trader. And of course, what group would you rather be in? Right? I'd rather be in the informed group. And again, being in the informed group, it provides us, definitely with an edge. Okay, can we quantify that edge? Is it going to make us X amount of profits on a particular day or a particular trade? Not necessarily, but there is an edge to it. Being informed is important. If you're uninformed, you're just you're behind the curve. And so our members, I certainly feel as though they are informed, and again, that helps improve ultimately their results over a period of time. Now, Patrick did say that the day session on a day-to-day basis is very structured, our approach. We do spend the entire day, whereas my counterparts may only spend a portion of the day, but we are in the room all day long, and it is a long day. All right, sometimes it goes faster than others, but what we try to do is we think of it more as running a marathon rather a sprint. We're not out of the gate and we utilize all the energy in the first half hour of the day, but rather we take our time. We're fairly methodical. We have a structure to our day, and what I want to do is just simply review for you what that structure is, and I simply call it standard trading operating procedures. Now, I have piloting experience, so a lot of I use checklists and again, very step-by-step approach. So standard trading operating procedures kind of go along hand in hand with that. So what we do is we start off the day with a daily trade strategy plan. Now, I write this out every day in the morning and is sent out to members and subscribers by usually no later than 8:30 Eastern Time, and it allows us to identify key levels in various trade scenarios. Let me just bring in a view of that so you understand what is being sent out to everybody. This is the daily trade plan, and what I simply do is I highlight the specifics on what's happened generally in the markets. We have a daily economic calendar. I hope this is showing up okay on the screen here. And then Terrific. And then I go into the PTG trading. Now, this is the section that I write. Again, you won't, no need to understand what it reads today on, but I go through what happened, a little brief action of what happened yesterday, how it segues into the current day's action, and we use what's called the 3-day cycle, and then that's subject for an entire webinar in and of itself. And then we have a chart that we look at for the day, and again that outlines the various levels. And then what the important part is here is the scenarios. Okay, so we're currently on the December contract, and the scenario 1 is a bullish scenario, scenario 2 is a bearish scenario. So we just simply outline what we think that if the market begins to unfold as in a bullish scenario case, what would be the potential for upside, and vice versa, potential for downside. And then ultimately the trade strategy that we use simply is unaltered. We use specific trade setups and we'll discuss those today using the auto trade, specifically premium and discounts. We have other trade setups that we focus on as well. So that is mailed out to everybody on a day-to-day basis. And then what we do then after that, once everybody has an opportunity to read that and get prepared, we all meet together at 9:15. And 15 minutes before the cash opening, we use that as an opportunity to hone or refine what we wrote about in the early daily trade strategy report as it is affected from the Globex into the cash session. And again, as the day unfolds, many of you are familiar with these terminologies. Initial balance, which is the first opening hourly high-low range. We start off with our opening range, and then we lead into that first hour. And by that time, within the context of that first hour, we want to determine what the directional bias is. Is there a directional bias? Trend day, non-trend day? That's an important consideration for us, because that tells us what type of strategies that we're going to use, all right, throughout the course of the day. Now, majority of the time, the S&P in particular trades in a range type condition, whereas a true directional trend is only about, perhaps, I believe, 30% of the time or so. I'm not sure the exact statistics there. But nonetheless, if there's ample range in a day, we can get several directional trades, all right, throughout the context of the daily range that really plays out very nicely as a day trader. We are not scalpers in any way. We're not, Super Mario scalp trying to get 3 or 4 ticks, but rather we're trying to identify directional bias. And we want to stay, in alignment with the dominant force of the day, bullish or bearish, whatever it may be. And when I speak of bias, I speak about the market's bias, not our personal bias. And then as the day unfolds, we scan through the session for specific trade setups, and today we're going to specifically speak of premium and discounts. And we have another category called stackers. And so as we get closer to the auto trade assistance, which is the discussion for today, we utilize our auto trade assistant as required, right, to assist us in trade execution. And we'll demonstrate for you today how we do that. And then at the end of the day, though I don't do it as a group, I do debrief or review my personal trade performance, as I recommend to all our members and traders. Definitely go over the day. You don't want to be a harsh critic of your performance, but rather a realistic coach for yourself. Did you follow good trade principles? Did I execute? And again, you can evaluate yourself in many ways, but be honest, and that's what I try to do, and express to our members on a day-to-day basis. Okay, so that is the overall view. Now today what we want to do is specifically get into the auto trade assistant. And before we get into that, I want to just highlight some of the features and highlights of it. So number one, and this is what we've developed over this past summertime, it's more evolutionary than revolutionary. And let me just highlight the genesis of this particular tool. As a room moderator, educator, there's a lot of demand on me to, keep, the room running efficiently. There's a lot of outside demands. So simply, there's a lot of distractions that go on throughout the course of the session. And of course, each of you experience your own various distractions. What's happened is because of those distractions, I may actually have missed some of my own trade setups that I've highlighted for the group in advance. We're looking to buy here, looking to sell there, and then all of a sudden, an opportunity presents itself, and simply I end up missing it. And so I thought about it for quite some time, and I've reduced the amount of distractions, and I've improved the ability to, my own personal trading, but at the same time there's still a number of distractions. So I utilized the power, I tapped into the power of the auto trade algorithms that Sierra Chart offers, and it's been a great experience. Number one, to build this, and then to now offer it to our membership. It certainly has helped me. So what I've done in the process of developing this is create a few aspects of which I think our members get tremendous benefit of. Number one, there's a position sizing algorithm. So if many of you are not familiar with position sizing, you will learn about position sizing through using the tool. We speak a lot about risk. We want to keep our risk minimum, uniform, under control across multiple trades. You don't want to be risking $100 on one, $300 on the next, and you're all kind of all over the place. You really want to keep that uniform, and this particular tool definitely helps do that. The risk either be defined by a percentage of account size, which is typical industry standard, or a specific dollar amount. As your account size grows, there's the ability to use a percentage of it per trade, but it all comes down to a dollar amount in the end. So for the entry, we use specific objective market structure. And I won't get into the particulars here, but it is a very well-defined type entry. It is not the highest price or the lowest price. We're not trying to buy the lows. We're not trying to get the high tick. We are trying to get an entry that is representative of a solid structure point from which more price development can occur from. Now the stop loss, as we mentioned, is specific, and we use a preset criteria for that. Now, I'm not sure, what the broad range of knowledge is on some of the terminology, but one R value or one risk unit, all right, is let's just say, for instance, you're risking $200 per trade. Well, that would be one R value, one risk unit. Okay, so each trade you want to keep at $200 or less. All right, so that's considered one R value. The targets, though, what we use are based on R value as well. So in other words, we use multiples of our initial risk. So as you can see, 1R, 2R, 3R, 4R, etc., right, is defined as what we refer to as the risk-free level, which is 1R. So if you're risking $200, as in this example, the first exit point would be a level from which, if you sold your entire position, one contract, two contract, whatever it may be, you are exiting at a plus $200 gain. Now, we don't use dollar values, to speak of on a day-to-day basis, but we refer to it as R value. So this way we can speak commonly with each other. So if one of our members said, I just got, I exited at plus 2R. Now, I don't know what his R value is, if he's risking $100, $50, $500, whatever it is. It doesn't really matter to us. What matters to me is he got a plus 2R based upon his personal risk unit. And that's a fantastic trade. So we're always looking to mitigate our risk, all right, and expand, try to get as much as we possibly can. Now, again, risk is an important part, all right. Patrick spoke of earlier about leveraging the risk on each in your account. So it's very important. We're very we're risk accepting, but we're very much risk adverse, meaning that we're willing to accept risk, but we want to manage it as closely as we possibly can. All right. Now, some of you may be thinking that, okay, wow, you know, you get a big position sizing algorithm type subroutine in there and so forth. How about if I'm a single contract trader? Can I use this type of tool? And the answer is yes. All right. And there's a way in the settings to use to use that a single contract. So don't fear if you looking at this or you're thinking that, oh, this is only going to be for those big contract traders, you know, 2, 3, 4 contract, multiple contract traders. If you're a single contract trader, it works very effectively. Okay? So, this part of the presentation, and I think we're pretty much on time because I do want to spend as much time as we possibly can using the replay feature. Some of you may be familiar with it already using the replay feature of the Sierra Chart platform. Some of you may not. We'll show you how to use it, and we'll demonstrate what we do. Okay, so let's do some chart replay, as they say. So let me click on this. Let me change the chart view. All right, so we should be seeing here the chart of the S&P 500 E-mini. And what I'll do is, before we start our chart demonstration, just bear in mind this chart demonstration is in simulation mode. Okay, they do represent trade setups that did occur on specific days. And again, this is in a replay mode and it is full simulation. So if many of you are not familiar with using the replay, what you want to do, before I get into that, let me just highlight what you're seeing here. Okay, so you can clearly see that the market here is in a downtrend. Now, this particular day is, I believe, yesterday, the 7th, and we're in a downtrend. And so what we're looking for in our methodology and the setups that we're looking for is classified, and it's called a premium. Okay, so what we're simply looking to do, and again, this is not rocket science, we're looking to sell a retracement or a bounce up in price within the context of a developing down move. All right, very simple. Everybody knows I want to buy a retracement, I want to sell a retracement. The problem is that I have found over the years is that where do I buy it or where do I sell it? At what point do I enter? And my background at the investment banks as a market maker, I was your ultimate day type trader. I was always buying on down ticks and selling on up ticks, and that's just a function, you know, of a market maker. Okay. Now, in order to do that, you need fairly deep pockets. All right. Well, most of us here as independent, you know, traders are not well funded, and we don't have those type of pockets. So where we don't have the bronze, all right, in terms of financial, we need to be a little bit more nimble and be a little bit smarter on how we enter trades, manage trades, all right, and of course, you know, the risk that we take. So what I've done here, I'm a very statistical trader. That's my background when I traded at the investment bank. So I'm always looking for a point of entry or exit where there is a relative statistical extreme. And so as such, what we use, and again, we're very transparent on what we use. So this is more, like I said, this presentation today is going to be more of a demonstration of what we would normally do in a Wednesday workshop environment for our members. We use a CCI indicator, right, Commodity Channel Index. We have proprietary settings that we use that are non-standard to what is currently, you know, out there in every platform, and we simply refer to them as premium or discounts. So what we're looking for here in this example today is we're looking for a selling short opportunity, i.e. premium, within the context of a developing downtrend. So that's the backdrop of what you see. Now what you see in terms of arrows here, we have two types of setups within the premium category. We have what's called a standard setup, which is identified by this white large arrow here. And then we have these smaller arrows that referred to as turbos. Okay? So that said, and you can see the text associated with that. So what this means here, for instance, at this premium, we're at 82.50. That is what we call the alert bar. And so we want to enter at the close of that alert bar that is valid with market structure. Okay? So that's kind of the setup there. We want to be in trend type conditions because that's the majority of where we're going to make the, have the best successful opportunities in our setups, is when there's a directional move. Now, this was an intraday directional move. So as I said, it does not have to be a true trend day as defined out there, in the universe, but rather, as long as there's enough range in the day that offers a directional move, that's all what we're looking for. And we're looking to, get on board that new directional move as soon as we possibly can. All right, so that's the backdrop, the scenario. All right, what you'll see here in the top left corner is this is our PTG ATA status box tool. And currently we're disabled, and I will enable it and show you how to do that. We're currently going to use a maximum risk of $400 a trade. Now, that may be well beyond most, risk assess parameters for most of you. I'm using a 400 just for demonstration purposes here because I want to be able to use multiple contract entry and exits to demonstrate the tool. But in our trading room, we use an average of $200 per trade. And again, as I said, if you're a single contract trader, you're only willing to risk, let's say, smaller amounts than that, $100 or so, that is perfectly fine. And again, the tool will work very effectively along those lines. And our entry method that we use is a market style order. We do not use limit orders. All right, limit orders for entry, I have found that with a limit order, you end up getting all the downside, but with very little upside. In other words, when you want in a trade, get in it, use a market order. When you want to exit a trade, you can use a market or a limit order, and we use limits to exit. So we use a buy or sell stop for entry, or there's the alternative is a market order. So we're currently set this to a sell stop. So let me show you, if you're not familiar how to use the replay feature, let me get you set up on this. All right, so give me just a moment. What we want to do here is we want to use the replay mode. So we want to either right click here and then find replay chart, or the alternative would be to go up here to the chart menu and search for replay chart. So in either case, what we want to do is replay a chart from a particular point. So what we have to do is, we already know the scenario. What we want to do, and this is a great tool, by the way, for our members as a educational tool to replay a day, or to, for instance, go back and see how the market unfolded. Using it as a tool where you want to try to better your entry, or what was the structure. There's a lot of ways of using it, but I do recommend to our members and to everybody, no matter what platform you're using, practice. You know how they say practice makes perfect, I suppose. Well, what we use the term deliberate practice. I want to deliberately practice identifying a specific setup. I don't want to go through the entire day and with all the various setups. I want to specifically identify one or two. And so that's what we're going to do today here, and we're going to demonstrate the auto capabilities, trading capabilities of the platform here. Now, again, in static mode, this may look fairly simple, meaning that, oh yeah, I saw a signal there, a white line, there's an arrow, okay, I'm going to just sell one at the market manually. That may be the case. And again, if you are somebody that does not have a problem executing, all right, then certainly continue manually. But for many traders, especially if you're trading contracts like crude oil or or Russell 2000, I'm sure many of you trade Russell 2000. Those things move very quickly. In terms of the S&P, the S&P is a lead sled, in comparison. So what you want to do is, when the rubber meets the road, let's just say, look, I know I want to be short. I know I'm looking for that pullback. So we know what to do and what we want to do, but when it comes time to actually take that execution, there's going to be a whole lots of uncertainty. Perhaps the market, what you're looking at, may be ambiguous. You're looking at perhaps the New York Stock Exchange ticks or something else, and all of a sudden, it's the opportunity has passed by, and then the market did exactly what you thought it would, and then you're chastising yourself because you didn't take that trade. Well, what we want to do in our membership is let the computer do the execution. I know I want to take a particular trade or trade from a specific side. That type of decision process, you want to do it in a calm state of mind. All right? Yep, I want to know, hey, there's a downtrend. We've analyzed the market. We've done our observation. We've done our orientation. Now it comes down to the decision and action cycle of our decision process. So what we want to do is we want to give an instruction to the computer. Find me the next premium opportunity and execute it for me and manage it in the with the risk parameters that I've given you. All right, so that's the whole decision process in a nutshell. Let's get to the actual running of the algorithm. Now what we're going to do here is we're going to run we'll run the algorithm so we capture these 3 trades. All right, now the one thing that I do want to stress here before I start is that losses occur. It's all part of every strategy. We accept them. All right, we need not fear them. It is part of the game. One of the biggest problems that I have come across many times with myself over the years, as well as speaking to many other traders, is that when you take a loss, the hardest thing to do is to get right back in and take it the next valid trade. All right, think about your own personal trading. How many times that has occurred to you? You take a trade, you're following a specific methodology, it gets stopped out, you curse up and down, and then a new opportunity presents itself, and you fail to take that next valid trade, and sure enough, that was the one that ultimately paid. And not only would have paid well, it would have covered that initial loss. So we've all encountered that. And the only answer I have to that, and I say to our members, is that you got to take that next valid trade. Is the trade valid? Yes. And if it is, simply you have to take it. So when you're using an automated type approach like this, as an assistant to help you, as long as you're not turning it on and off, it will actually execute. So what we're going to do here is this sequence, this first sequence here, I'm going to tell you in advance that it got stopped out, and then it took the next trade here on that white arrow. Okay, so isn't it nice to know what's going to happen in advance? Wouldn't you like to know what's going to happen in advance on the right-hand side of the chart? Well, when somebody finally gives me the algorithm for that, boy, all right, that's going to be priceless. But for educational purposes here, what we'll do is I want to scroll back to just prior to this time. Okay, so that's what we'll do here. So give me a second here if I can do it without bypassing it too fast. Okay, so what we want to do here is simply using the replay feature is start it ahead of time, okay, to that point. Now what we want to do is I want to enable the tool over here, so we're going to simply go to right click, and I want to enable sell only in this case. So since we're in a beginning of a developing down move, all right, trend type direction, I want to only look for selling opportunities. And this allows us to not counter trend trade, but trade only in direction of the dominant force. In this particular case, it is the sell side. All right. So let's click on that, and you'll see in the top left corner that it says enable sell only. So we're in good shape there. So we're all set to run the tool. And let me just bring this little tool into view here, so you see that we are definitely in replay mode. And we're going to, if all works well here, we're going to just simply click on play. Okay, it's going to ask us to replay data. We may not, at this stage, we may need to just reset the chart for a second, but it needs to reload the data. All right, takes pretty quick. Okay, and yes, just as I thought, we're going to just need to back up a little bit here, all right, to that particular point where we want to take a look at our trade on the short side. Okay, I think this is, we want to look for the one in the morning. $9.38 on the 7th is what we're looking for. Okay, we've gone by that, so my apologies. Let's go right to the 7th. I knew I was going to pass by that. I always seem to do. Okay, so here we are. All right. Okay, here we are on the 7th. Okay, and this is about where we want to start the tool. So again, the scenario is we've broken down, we're in a sell mode, and what at this point, what we do here is we have an understanding of, you know, we want to look for sells. So what we do is, you know, of course, there's no signals here at this stage, but we're looking for the next retracement back up at or near what we call our fair value zone, that shaded area. So what we simply do is we'll enable the tool, and then that's really it that we need to do. Okay, and then we let, you know, and then of course the market's already live, and it just simply will unfold and then take the trade, you know, as it takes it. So what we're going to do here, of course, many of you, you know you've run in replay mode. We want to run it at a little bit faster speed. Okay, so we can uptick the speed here from 1 times to, we can go, let's just incrementally go up to 5 times. And what I'll do is I'll pause this so we can explain what you're seeing on the screen here. All right, so let me just quickly stop this. All right, and again, this is what we do in our workshops. So here's a premium that's beginning to form. Remember, we're already in auto trade mode, so it's just going to automatically play out. But this is our premium. All right, now in real live mode, what we would be doing is, you know, we'd be preparing to take a short sale. All right, but what the criteria is for the entry and so forth, the algorithm already knows. So we're just simply letting it play. Okay. So there you go. So let me just quickly stop this once again. And this is what you'll see. And this is the automated feature of Sierra Chart that's absolutely fantastic. It works great. If you've never used it before, I think it's something you really should explore. So here's our setup. We knew we wanted to take an entry, okay, on a valid setup, and the algorithm identified this in advance as it was unfolding live in real time, and then we already know the parameters. So in this case, it's staged in order to sell 4 contracts at 82.50 with a stop above the high pivot there. And then at the risk-free level, what we have it set for is we have it set to scale out 50% of our position at the risk-free. Now remember what I said earlier, the risk-free it's the 1R value. So the initial risk on this particular trade, and again, this is for demonstration, so don't worry about the size of the risk, but I wanted to use it a size that we can get multiple exits from. $400 initial risk, and then notice $400 initial profit or 1 hour value at the risk-free level. So that's how that's staged. Once this gets triggered, as price comes down and executes at the risk-free level, okay, we're totally out of our risk. And what we have is what's called an auto break-even, which simply means is once this risk-free level is triggered, now where you're at most risk, at what point in the trade are you at most risk? The entry, right? So if we enter this trade and ultimately it comes up and it does not work and gets stopped out, that's an acceptable loss, right? There's not much more we can do. It doesn't mean that you did anything incorrect or but rather that the market just didn't play out fully, all right? But as long as it's a valid criteria trade, it works out nicely. All right, so let's just watch this play out. All right, and as I mentioned, we already know in advance this is going to get stopped out. All right, I've already laid that scenario up, but I want to see how it works. So there it is. Gets stopped out. Oh, woe is me. All right, this is no good. The market is blinkety blink blink. Okay. Now, as a systematic, disciplined trader, whether you're doing something via an auto trade or you're doing it manually, what is the next? Do you sit and be woe is me because we got stopped out? No. If there's a new valid setup, you must assess it timely and decide whether or not you're going to take that next trade. And again, as I said, one of the shortcomings of many traders, and I've experienced myself, is that you take a loss and oh my God, I don't want to lose another one, 2 in a row. But really, that's where the rubber meets the road. That's where you really need to you'll make progress. And it's like building a callus, or building muscles. You have to, you're exercising, you're going to be sore, it's going to hurt. But the more you do it, the less painful it becomes, and actually you begin to see progression. Now, using an auto trade such as this and utilizing the power of the Sierra Chart platform, all right, we just simply let it run, okay, in this particular instance. Again, we still are looking for selling opportunities, so we'll just let it run. So let's just watch this run a little bit. All right, a new setup will come in, as you can see. Boom. All right, it stages the order, executes the order. All right, let me just stop it once again for a moment. Executes the order, places, now in this case it's 3 units. Well, boy, the other one was 4. Again, automatic position sizing. All right, utilizing that algorithm. The risk here is below $400, and so it position sizes this to 3 units. So it's not the number of contracts that you trade, but rather the amount of risk that you're putting on for each trade. And again, that is personal, all right, to each one of you. And again, the algorithm will accept whatever risk parameter you want to use. All right, but again, in this example, we have multiple contract and we want to use. Now, what will happen here is we'll get to the risk-free level, and I believe this one will, and I'll show you the auto break-even. So let's just run. It's always fun to watch the replay. Now, this is what I do when we explain to our members and we review trade, and this would be something that you would want to do as well. And it's a great feature, and let me tell you, there's a great educational benefit to this. All right, our members absolutely make tremendous amount of progress. As many of you know, you don't learn while you're trading, all right, because it's, in the heat of battle and so forth. Okay, you learn after hours. You learn reviewing. Again, you don't want to be critical of yourself. All right. Okay, so here's the auto break even. So what happened here was price came down, got risk free. All right, so it bought 2 contracts back out of 3. All right, and the stop which was originally placed up here at the 85 quarters, all right, is automatically moved down to the entry. So that's called auto break even feature. In an upcoming version into next year, we're going to have an auto trail feature, but we don't have that quite yet. So let's just watch this play out. Okay, so notice what happened there. All right, price bounced right back up, boom, right to our entry price and stops us out. Well, that's okay. We're fine with that. Why? Because we were very disciplined and it got us to the risk-free level. We took something out of the trade. So that last contract, no big deal as far as we're concerned. All right. So let's just watch this run a little bit more. Let me just speed it up just a touch, and we'll look at one or two more sequences as this runs through. And if you guys have any questions, feel free to post them up there. Okay, yes, it is being recorded. All right. So again, I'm just using, all right, so there it is. Now, again, it stages the order. Now, this one is for 2 contracts. Why is this one 2 contracts? Okay, the reason here is because, so we went from 4 to 3 to 2. Well, the reason being is the criteria that we use, from the high point of the pivot point to the entry, it's a wider entry to stop. So using a volatility stop, all right, within the context of the position sizing algorithm, it is, again, keeping your risk uniform under control. Remember, everybody, it's not about getting the highest entry or the lowest, entry point, all right, but rather staying in direction and getting the structure correct. How are you determining trend, and does the algorithm keep out of the chop? Okay, it's a great question. Down here we have what we call our PTG trender. Okay, so this is the context of the trend or the directional move, all right, intraday that we look at. And so the algorithm right now keeps us in alignment with that. Now, the main purpose of using this, let me just get rid of this arrow. The main purpose of using a tool such as this, and it is a tool, remember, I just want to stress one thing, that it's not a black box. Okay, this is, consider this more of a light gray box, meaning that, again, the operative word in the tool is assistant. So it's going to help you take the trades if you find that, you need that assistance. All right. The decision, though, is still in your hands. You have the power to enable it or disable it. Okay, I have it in what's called continuous mode right now, but there is a per trade mode. So you have the power, and that's what I wanted to do for our traders and end users for this product, is that I want to put the power of the algorithm. So when you think about, okay, the high frequency traders and algos that are out there in the world, right? Everybody has difference of opinions about what they use, but look, the bottom line is somebody's turning on an algorithm to run a specific strategy, whatever strategy that may be, from a mutual fund down to the high frequency trading firms and so forth and so on. So somebody has to turn it on and turn it off. Okay, but once they turn it off, and the reason why they're turning it on and off is because the conditions of the market are favorable to what they want to do. All right, so then they turn it on and let the the automation part do what they've been instructed to do. So what I'm saying here is that you have the power to control when you want to turn this on and off. And again, part of the education is, when do we do that? When do we turn it on? And under what conditions? So we want to turn it on under the conditions of we have some sort of directional trending move. Now the question here is, how do you know when to turn it on? Does it keep you out of chop? What keeps you out of chop, so those sideways ranges, all right, is the trader, is you, is your decision. You need to, uh, I spoke at the outset of the presentation about becoming a better decision maker. Right, that's important. And part of that decision process is knowing when or under what conditions you want to trade, directionally, or if there's a non-directional activity in the market, such as a sideways choppy type range. Well, at that point, we're going to disable the auto portion of it. The setups may still present themselves and show, but at that point, we're going to turn it off and do things more from a manual. We may want to adjust our trade strategy instead of a trending condition to buy or sell the price edges. And at that point, this tool is not designed for that at this stage, but rather we do that on a more manual basis. Now, the trading room that I run with our members is ongoing, educational process and demonstration throughout the course of the day. So I think the best part of learning any methodology is exposure. All right, it's great to show you, what we're doing here today in demonstration, but it's another to get continuous exposure to it, and that's what trading is all about. You're not gonna, we'll offer you, a free trial here towards the end here that's more generous than most out there. So it allows you to have an opportunity to see various market conditions that we go through. I mean, I'm giving you a one scenario condition right here. In a presentation like this, very, very difficult for me to to be able to say, yeah, this is going to work in all market conditions, because it won't. All right, these are specific market conditions where the opportunity is most favorable for us to have a successful outcome given a level of risk. Okay, so let me just continue on here a little bit, and I'll see what other okay, so there's the execution. All right, let it run a little bit here. I'll just check out some of the questions. Can the stop be manually moved? Yeah, so that's a great question. So let me just quickly pause that. All right, at this point, okay, so the question was, can the stop be manually moved? So once the Sierra chart, chart trader automated execution executes the trade, all right, and it stages the stops and risk-free and so forth, you have the ability to move it around. Okay, so although we have an auto break-even feature, you can grab this now and move it up. You can grab it down and move it tighter. Okay, let's just say you think the market's going to go much further than target 1 here, which is a 2R value. You can go, hey, I'm going to move it down to target 3, and then as price moves down, I'm going to manually move my stop. All right, so let's actually just do that. Let's put it back to where the break even was. All right, and then let's just play out a little bit and let's see what happens. Okay, so how we would manage something like this is we've got our risk-free point. Once price moves lower below that risk-free point, we can begin to manually manage the trade or drag the stop. Okay, to try to capture as much as we possibly can. Now remember, we moved the exit from target 1 down to target 2, and I don't think we're going to get executed on here. Yeah, so here's what also happens while we're doing that. Okay, I don't believe we're going to get triggered there. If you're already in a trade and a new setup forms, as it's forming right now, okay, it will not take that trade until the prior trade sequence is complete. Okay, so this will not execute here since we have one contract open. All right, so let's just take a quick look here. Now what we want to do here, okay, so now let me just quickly pause this. So remember, we're in a trade from a little bit earlier, and the question was, can we move stops? So at this point, what we could do is simply drag our stop, right? Let's just say down to this risk-free level, okay? Now we're shooting for this lower target, and now we can just that's the power of using the auto trade tools, all right, by Sierra. Okay, so we moved it down, and as you can see, we got stopped out at a little bit lower, better price, but we were able to move that. Okay, so that is, the tool, guys, in a nutshell. All right, I think we're pretty much on time here as well. Let me see if there's any other questions I can quickly answer here for you guys. Let's see. We have some statistics about how it's performed on our website. So you can visit the website and take a look at that. I won't discuss the various statistics right now, but we do have some statistics on it. All right, and feel free to look for that as well. Let's see. If one market is in a non-trending pattern, do you check out and trade other markets with your auto trader? Okay, so which is primarily just crude oil have been also working. Yeah, so great question, because like crude oil and S&P lately have been pretty much kind of running hand in hand with each other. What we do in our trading room is we actually have the S&P and crude oil showing at the same time. We don't use the auto trader kind of like as a pairs trade type auto trade. We use it independently, but we do watch the other markets. Absolutely. I mean, I think if you were just watching one market without watching the others, I mean, you're missing part of the picture. But the core decision to whether to turn it on, use it, and so forth is independent. So we'll turn it on for crude oil or turn it off for crude oil as the conditions dictate in crude oil. Okay, crude oil has its own personality. Many of you that certainly trade it know it's not for the faint of heart. I don't think I could trade crude oil without using the auto trade assistant. It's just way too fast. It's much easier to say I want to be long or I want to be short, I want to trade it from the long side, etc., and then turn on the tool and let it do its thing. Now remember, it's not about getting that best price. And I know all traders, including myself, I'm a bit of a perfectionist. I want to get the best price possible, right? Okay, accepting of that. But I want to get in the proper trade opportunity. And because I know if I have a specific dollar risk that I'm going to risk per trade, and it's within the context and what I've decided what I'm willing to accept, then I'm willing to accept the fact that if I do get stopped out, I get stopped out. It has nothing to do with how well I personally performed or whatever, but rather many times the conditions of the market. So what we're trying to do is become better decision makers and make the decision to enter the marketplace with the proper conditions. So that's part of the education, all right? I can't show DAX at this point. We do have members, though, that are currently trading the DAX. I also have a member out in Italy that trades the Bund. All right, and so it is usable on multiple instruments. All right, does not just the S&P. I mean, we have many Russell traders, Nas traders, Euro. Okay, the mini euro, I guess the mini euro has gotten very popular, and they also have the mini DAX now, so that's a great contract to perhaps use it on. So it's much less capital involved in using that one. All right, I think that's it for the moment. So I could go on and show various demonstrations of this tool, but again, the core use of it is to help you execute a trade. Now again, these are our trades, the Polaris Trading Group methodology. So of course you would need to learn, all right, if you're interested in this, you would need to learn what we do and so forth for the particular setups. This is not a generic tool, but rather one that conforms, and it's an evolutionary tool, like I said. The genesis of it we spoke of earlier. And now our members are using it much more consistently. And as with any tool, we do recommend beginning off in simulation mode, and until you get accustomed to how it works, and you work into it and you build confidence. And I think it is a very good confidence builder, all right, in terms of becoming better at making those decisions. And again, that's part of the core of what I teach on a day-to-day basis. So with that, let me just finish up my presentation. And again, speaking of Sierra charts and Polaris, okay, I've been using Sierra charts now for a number of years. It is our primary teaching platform throughout the day, and as you can see here, lots of advantages over other competitors out there. It's super lightweight on the system, and as Patrick mentioned at the outset of the presentation, you really can't compare this. This is apples and oranges. I mean, you get volume profile, the delta type footprint charts, they call them number bars. We utilize all that in our membership as well. Again, we did actually a webinar on the use of number bars with Infinity a short time ago, and that's on our website, so you can certainly review that webinar as well. Seamless integration, right? Again, that's one of the true benefits. Position sizing, risk management features, kind of we went over that. And what I do for our members, all our software is customized. In other words, you don't have to worry about building your own charts. What settings should I use? All right, all that we can is already done for you. Okay, and in our members, and many times, somebody may ask, even what's kind of cool about it is somebody may ask during the day, can I have can we do something on a particular chart? And I said, sure. Let me if I have a little bit of time during the day, it'll take me 5-10 minutes, and then I set up a chart book for that individual and for everybody, and it becomes they're able to upload it or download it from the website. It's kind of cool. There's a lot of great integration to this. Okay. Yeah, I'll talk about that in just a moment on the next slide. Okay. All right. So again, I appreciate everybody's time taken for this, and what I would like to offer everybody, all right, is two things. Normally we have a 7-day trial on a day-to-day basis. With this webinar, we extended it to 14 days. Come in, take a look. Here's the link. All right, click. Well, you can't click on it, but go put that in your URL address line and sign up for a free trial. We'll extend the 7 days to 14 days. Also, we're going to give a concurrent 14-day free trial to actually the chart book that you saw today in the webinar, specifically on the ATA. Okay, if Patrick can post that link, that would be great. If you can for me, Patrick. I don't know if you can, or I guess I need to, right? Hold on just a second. www. Oh, you did. Okay, terrific. Thank you. Okay, terrific. And so finally, so what are some of the benefits? Okay, again, we spoke about a pre-market briefing, active live analysis throughout the entire day. As I said, we start at 9:15 in the morning, even much earlier, and then we just we finish up at about by 4 o'clock. And our membership is really friendly. I got to tell you, I mean, they go out of their way to help and answer questions for trial members or new members, and we're all a community of just simply trying to become better traders. Okay, and it's important that you have that support group, and I think we have a tremendous support group there. And then so come visit us. All right, love to see you. And if you, again, you can contact me. You can send me an email if you have any specific questions that I was not able to answer in today's webinar. And of course, some of you that perhaps are not current customers of Infinity, I highly recommend you contact Patrick to learn more about getting a demo from them, and which again can be very easily integrated with the demo that I have here at Polaris. So with that, I want to again thank everybody for your participation. It's been great. I also want to wish everybody a great holiday season, Merry Christmas, and I hope we all have a very, very good and positive new year. And that's it. So I will pass the mic over to Patrick to finish it off.